Good afternoon. In my previous video, we discussed about third module, that is three-column cash book, and even I think we discussed about classification of cash books and all. Today we are going to begin with fourth module, which is consisting two aspects. One is depreciation and another one is bank reconciliation statement. In this class, we are going to discuss about depreciation and we are going to solve certain problems on depreciation. First, let's see what is the meaning of depreciation, what are its features, and what are the reasons for depreciation. Later, we'll go towards the methods for depreciation. The methods for depreciation. Okay. What is depreciation? First of all, the term depreciation is used in case of fixed asset. What is fixed asset? The asset that is purchased for use for a long period of time, that asset is called as fixed asset. If we are using same asset over a period of time or for a long period of time, then the production capacity of that particular asset decreases. It goes on decreases. So there will be a reduction in the value of an asset. That reduction in the value of an asset. Yeah. Reduction in the value of an asset is known as depreciation. So let's see what is the exact meaning of depreciation. Depreciation, it is a reduction or decline in the value of fixed asset due to its wear and tear. Due to its wear and tear. It means if we are using same asset for a long period of time, the production capacity of that particular asset, it goes on decreases. So we need to reduce the value of that particular asset. That concept is called as depreciation. So depreciation is nothing but it is continuous reduction in the value of an asset due to its wear and tear, that is known as depreciation. Let's see what are the features of this depreciation. These are some of the important features of depreciation. First one is it is only applicable to fixed asset. It is only applicable to fixed asset. It means it is not applicable to current assets of the business. And second thing is the amount of depreciation should be treated as loss. Depreciation is what? It is a loss and it must be recorded on the debit side of profit and loss account. First feature is it is only applicable to fixed asset. Second feature is it should be treated as loss and it must be recorded in profit and loss account. And third feature is it is continuous decrease in the value of an asset. Meaning, here in case of depreciation, year by year, the value of asset it goes on decreases. It does not mean that 1 year its value decreases, again it will not decrease or it may increase. It will not happen like that. In case of depreciation, continuously the value of an asset it goes on decreases. That is third feature. And fourth important feature is your total amount of depreciation should not exceed the net value of an asset. So these are four important features of depreciation. First one is it is only applicable to fixed asset. Second thing is here the amount of depreciation should be treated as loss and it must be recorded in profit and loss account. And third thing is it is continuous decrease in the value of an asset. And fourth thing is the amount of depreciation should not exceed the net value of an asset. So these are four important features of depreciation. The next one is what are the causes for depreciation? What are the reasons for depreciation? Or you can say why we should charge depreciation to asset. The first reason is normal usage. Meaning if we are using same asset over a period of time, day by day, the capacity of that particular asset decreases. That is the reason we should charge depreciation. So normal wear and tear. Then second one is mishandling of an asset. Workers may not be able to handle the assets properly. They may cause some damages with an asset. Understood? So to replace such kind of damaged asset, we need to charge depreciation. And third one is lapse of time. Lapse of time means For example, if you purchased an asset in the year 2015 and if you are planning to sell that particular asset in the year 2020, you cannot sell it at the same price because of lapse of time. You used that particular asset for a period of 5 years. That is what? That is lapse of time. That is another reason. The next one is a change in technology, meaning every companies wish to adopt a new technology. So they should replace their existing technology. In order to replace their existing technology, they have to charge depreciation on it. By charging depreciation, they can write off that existing technology and they can go for new technology. So these are four important reasons, or you can say causes for depreciation. Next one is, what are the methods for depreciation? Actually, there are two methods for depreciation, or you can say there are two methods which are made available for depreciation. First one is a straight line method. Straight line method. This method is also known as fixed installment method or original cost method. This particular method, it is also known as a fixed installment method or or original cost method. Original cost method. These are other names for which method? These are other names for this straight line method. Straight line method is also known as fixed installment method or original cost method. Yes. Yeah. How this particular method works out? See here, under this particular method, every time we are going to charge amount of depreciation, or you can say every time we are going to charge same amount of depreciation for all the years. Understood. Fixed installment method, meaning every time we are going to charge same amount of depreciation. That is the reason this method is known as a fixed installment method. This method is also known as original cost method because every time we are going to charge depreciation on the original cost of an asset. That is the reason it is also known as original cost method. See here, in this method, fixed amount of depreciation will be deducted from the value of asset every year. It means every year we are going to charge same amount of depreciation. Understood? That particular method is called as a straight line method. The nature of this particular method is, here amount of depreciation will be remain same for all the years. And second feature is, once the estimated life of an asset comes to end, the value of asset will become zero under this particular method. Understood? That particular method is known as a straight line method. See here, following are some of the features of this method. The amount of depreciation will be same for all the years. The next one, the value of asset will become zero once the estimated life of an asset comes to end. For example, for example, company purchased asset, company purchased, company purchased asset for rupees, for rupees 1 lakh, for rupees 1 lakh. And it is planning to charge 10% depreciation, 10% depreciation, 10% depreciation every year, 10% depreciation per annum. Then what would be the amount of depreciation? See here, this method is also known as which method? Fixed installment method or original cost method. This method is original cost method because every time here we are going to charge depreciation on original cost of an asset, that is rupees 1 lakh. First year amount of depreciation, that is 10% on 10% on 1 lakh, 10% on 1 lakh. What would be the amount of depreciation? 10,000. Then again second year, again we need to charge depreciation. Again we are going to charge 10% depreciation on on original cost of an asset, that is 1 lakh rupees. So again amount of depreciation for the second year is also 10,000 rupee. Understood? So this method is known as what? Straight line method. Once again I will repeat. First of all, this method is also known as fixed installment method or original cost method. This method is known as fixed installment method because here every year we are going to charge same amount of depreciation. And this method is also known as original cost method, because all the time here we are going to charge depreciation on original cost of an asset. That is the reason it is also known as original cost method. Yes, how this particular method works out here. Under this particular method, every year we are going to charge same amount of depreciation on the value of an asset. Understood? Every year we are going to charge same amount of depreciation on the value of an asset till the estimated life of an asset comes to end. That particular method is known as original cost method, or fixed installment method, or straight line method. And here this is the formula for calculation of depreciation under straight line method. That is, depreciation is equal to cost price minus scrap value divided by estimated life of an asset, divided by estimated life of an asset. Here, cost price means acquisition price of an asset. Scrap value means once the estimated life of an asset comes to end, we will sell that particular asset as a scrap and will receive certain amount. That amount is called as scrap value, divided by estimated life of an asset. Understood? We will get the amount of depreciation. Yes. Here, one more very important thing that you people should keep in mind is, here cost price of an asset, it includes acquisition price of an asset, installation charges, transportation charges that are incurred to get the work from the asset. Meaning, till you are going to get work from the fixed asset, whatever expenses will incur, those all expenses are considered as cost price of an asset. So this is about which method? This is about straight line method, or you can say fixed installment method or original cost method. Okay. Then the second method is written down value method. Which method? Written down value method. What is written down value method? First of all, this particular method is also known as a reducing balance method or diminishing balance method. And under this particular method, only first year we are going to charge depreciation on original cost of an asset, and for further years we are going to charge depreciation on the written down value of an asset. That particular method is called as a written down value method, meaning only first year you are going to charge depreciation on original cost of an asset. Understood? For further years you are going to charge depreciation on written down value of an asset. That particular method is called as written down value method. What are the features of this particular method? The main feature is, under this particular method, the amount of depreciation will be differ from year to year. It will be differ from year to year. In straight line method, you will find same amount of depreciation with all the years. But under written down value method, amount of depreciation will be differ from year to year. And the second thing is, the amount of depreciation, it will be goes on decreases. It will be in a decreasing trend. It goes on decreases. That is second important feature. And third important feature is, as we all know that under straight line method, once the estimated life of an asset comes to end, the value of asset will become zero. But under written down value method, the value of asset will never become zero. Understood? Here, even once the estimated life of an asset comes to end, we are going to find certain balance with asset account. That particular balance should be treated as scrap value of an asset. It is about which method? Written down value method. Written down value method. Okay. So these are certain journal entries which you must keep in mind for solving problems on depreciation. Actually, depreciation is very important because you people are going to get one 10-mark problem on depreciation. Yes, before going towards journal entries, I will tell you people how we should calculate a depreciation under written down value method. Assume that your asset is purchased for rupees 1 lakh. Rate of depreciation is 10%. Understood? Now, how to calculate depreciation? See here, first year. Only first year you should calculate a depreciation on original cost of an asset, that is 10% on 1 lakh rupee. 1 lakh rupee. What is the amount of depreciation? 10,000 rupees the amount of depreciation. If it comes to second year, second year, you should calculate depreciation on written down value of an asset, that is 10% on 10% on 90,000. How you got this 90,000 rupee now? Here 1 lakh rupee minus previous year depreciation. 90,000 rupee will be the written down value of an asset. So 10% on 90,000 is how much? 9,000. And for the third year, how to calculate the depreciation? For the third year, it will be like this. It will be like this. 10% on, again written down value of an asset. Previous year written down value was 90,000 rupee. This year it is a 90,000 minus 9,000, that is 81,000 rupee is the written down value of an asset. So 10% on 81,000 is how much? 8,100 rupees the amount of depreciation. Understood? So it is how we should calculate depreciation. Under which method? Written down value method. You can see all three features in this particular calculation. Here amount of depreciation is differ from year to year. It is not same for all the years. And second thing is amount of depreciation, it goes on decreasing. It goes on decreasing. And in this particular method, asset value will never become zero. Asset value will never become zero. You are going to find certain balance with the asset account. That particular balance should be treated as scrap value of an asset. Scrap value of an asset. Understood? Okay. Now, yeah, let us discuss about the basic journal entries in connection with depreciation. Actually, you just need to keep in mind first three journal entries in order to solve problems on depreciation. Here, first journal entry is for purchase of an asset. Purchase of an asset. If you purchased asset, what would be the depreciation? Sorry, what would be the journal entry? Asset comes in, cash goes out. So asset account debited to cash accounts. Here for purchase of an asset, what would be the journal entry? Journal entry is asset account debited to cash account, cash or bank account. Then what would be the journal entry for writing of depreciation? See here, you purchased asset and at the end of the every year, you should charge depreciation on that particular asset. So what would be the journal entry for charging depreciation? Depreciation account debited to asset account. Depreciation account debited to asset account. Why depreciation account should be debited? Because depreciation is a loss. That is the reason depreciation account should be debited. Then why asset account should be debited? Asset account should be, sorry, why asset account should be credited? Because part of the asset is going out of the business. Part of the asset is going out of the business. Going out of the business. That is the reason we should credit which account? Asset account. So once again, what is the journal entry for writing of depreciation? Depreciation account debited to asset account. Yeah. Then the next journal entry is for transfer of depreciation. For transfer of depreciation. See here, depreciation is a loss, and it must be recorded in profit and loss accounts. Here it is a loss, and it must be recorded in profit and loss account. Now, where it must be recorded? It must be recorded. It must be recorded on the credit side. Sorry, on the debit side of profit and loss account. Keep in mind, depreciation is loss and it must be recorded on the debit side of profit and loss account. So what would be the journal entry? Journal entry for transfer of amount of depreciation is profit and loss account debit to depreciation account. What is the journal entry? It is a profit and loss account debit to depreciation account. Okay. Now, yeah, these are three basic journal entries which you must remember for all the time in order to solve problems on depreciation. Further, fourth journal entry. Now, the remaining three journal entries, that is fourth one, fifth one, and sixth one. These are some advanced entries you can say. These are related to sale of an asset and profit or loss on sale of an asset. Suppose if you sold an asset, what would be the journal entry? Journal entry is cash account debited to asset account. If you sold asset, cash comes in, asset goes out. So cash account debited to asset account. Okay. Then next one, yeah. For adjustment of profit or loss on sale of asset, for adjustment of profit or loss on sale of asset, we need to pass journal entries like this. For adjustment of profit on sale of asset, for adjustment of profit on Sale of asset, sale of an asset. What would be the journal entry? Asset account debited to profit and loss account. Then for adjustment of loss on sale of asset, journal entry is profit and loss account debited to asset account. No need to bother much about fourth, fifth, and sixth journal entry. You should be perfect with first three journal entries, that is purchase of an asset, writing of depreciation, and transfer of depreciation to profit and loss account. Once again, I wish to recall these all three journal entries. First journal entry is for purchase of an asset. Asset comes in, cash goes out, asset account debited to cash account. For writing of depreciation, depreciation is loss and part of the asset is going out of the business. So journal entry is depreciation account debited to uh, depreciation account debited to asset account. And third journal entry is for transfer of depreciation. Actually, depreciation is loss and it must be transferred to profit and loss account. So journal entry will be profit and loss account debited to depreciation account. So this much you must keep in mind for solving problems on depreciation. You may get some 2 mark questions on depreciation, like what do you mean by depreciation? What are the features of depreciation? What are the reasons for depreciation? State the methods of depreciation. What do you mean by straight line method? What do you mean by written down value method? Give the journal entry for writing of depreciation. Give the journal entry for transfer of depreciation. Like this, you people may get some of the 2 mark questions on depreciation. Yes. So this is what you people should keep in mind about depreciation. In my next video, I will tell you people how to solve problems on depreciation. Yeah. Thank you so much.